Today in crypto, democracy has been a hot topic for the last few years. For some, it's a right that is appreciated and cherished. For others, it is a dream they someday hope to experience. In the US, there is growing unrest that democracy can take many forms, and the current one doesn't actually represent the people. This may seem contradictory at first, but America is a representative democracy, not a direct democracy. For an office as important as the presidency, this means that voters elect representatives, who then select, in a not well understood way, the Electoral College, who then selects the winning candidate. This is the same process used for a very long time, but was set up because direct voting was complicated 2 centuries ago. Ironically, today direct voting is arguably much more simple than the several layers of representatives. And given that in the last few decades there have been several incidents where the Electoral College did not represent the popular vote, this has left a sour taste for a society that considers voting a basic right. This isn't an essay on the American voting system, but it is a prime example of what can happen when the community loses, or even feels like it loses, its right to have a voice. There are books to be written on the democratic unrest issue. However, one of the biggest takeaways is simply that technology is able to set up a democracy where everyone has a vote, everyone has a say, and anyone can propose an idea. When we have the technology for something important, and we don't use it, unrest is sure to follow. The same feeling of wanting a voice, and wanting a place at the table, is becoming part of our global culture. There is more and more a feeling of frustration with company leadership making unpopular decisions that take advantage of the community. With billionaires going to space while their employees can't take a bathroom break, the tension between leaders and their communities is growing. It's no wonder that with a decentralized organization, there is a massive appeal to the rise of blockchain projects and their focus on transparency, equality, and having a voice, not just in their company mission statements, but in the very fabric of the blockchain structure. This decentralized fabric at the heart of many blockchain projects is the DAO, the Decentralized Autonomous Organization. The process to join the DAO is, in most cases, simple. Users who purchase tokens on the chain and stake them, agree to hold them for a certain amount of time, gain access to the DAO in proportion to the amount of staking. More tokens for a longer amount of time is better. This allows members to vote on governance decisions, and also allows them to propose new ideas. These ideas vary widely and can include proposals such as how the treasury tokens are spent on new projects, a decision to evict a bad actor, or a decision to mint more tokens. Each DAO is slightly different from blockchain to the blockchain, but the overall structure and purpose are the same. Contrast this level of direct democracy with a traditional public company. Yes, with a publicly traded company you may have shares that allow you to be a part of meetings, allow you to vote, and may even allow you to speak. However, unless someone is one of the few stakeholders with the majority of shares, this voice is nearly always ornamental. In addition, these companies are primarily controlled by a board of directors, the CEO, and other top-level leaders who will make their own decisions and only need to please the few majority shareholders. Whereas having a share of a company really means that you can sell that share, being part of the DAO in a blockchain offers a voice that is significantly louder. Further, there is no annual shareholder meeting where you would have to travel in order to attend and long procedures to participate. With a DAO it is virtual, it is accessible, and it is continuous. In other words, it is democracy in its purest and most direct form. The DAO is a powerful structure that ensures a blockchain will evolve under the direction of its members. However, some blockchain projects are taking this one step further, and are building in their own unique ways to bring power to the people. Is a short-form video platform that has been dubbed the, with a unique algorithm called Proof of Influence, has made this the corner of their business model. For instance, the platform is teaming up with a multimedia firm Cosmic Wire to create and sell 6 one-of-a-kind NFTs from Banksy's Sky Boot wall mural. Normally the firm would pay for traditional advertising ahead of the sale, but the Rainmaker twist is that members of the Rainmaker community will spread the word to their social media circles. Instead of spending money on standard advertising, the platform will take the budget, $100,000 in this case, and use their proof of influence algorithm to see how well its users have spread the word. Based on how effective each user is, they will get a portion of the $100,000 for their efforts. Ryan Maker's philosophy is simple. The people are going to share what they are passionate about, and their sharing has more impact than ads. Why not cut out the middlemen and give the power and money to the people? It is a surreal time in our history right now, with traditional democracy being questioned as favoring some over others, or at times failing in its representation of the people. At the same time, it is fascinating to see that through this unrest is a solution that directly addresses the heart of the issue: decentralization through blockchain technology. It feels like this innovation has been developed at just the right time, and with teams such as Jeung and Ryan Maker, along with any project that leans into a true DAO, we will be able to see more and more reasons why decentralization can and does work. Power to the people. Launched on the Ethereum network, the Label platform has one of the most original governance and incentive mechanisms in the crypto space. Set out to revolutionize the massive open online course (MOOC) industry with a blockchain-based entertainment education platform, it has gathered support from major partners. Per an announcement by the Label Foundation, the project has successfully completed a $1.0 million private sale round led by HG Ventures with participation from major institutions and leading venture capital investors in the crypto industry. This includes GBIC, Mindfulness Capital, IOST, M6, Adaptive, Icetea Labs, Alphabit, and Pragma. The partners have come together with Label to create an innovative new platform to support an NFT infrastructure entertainment education platform and take the MOOC industry by storm. As mentioned, Label is an Ethereum-based worldwide content incubation platform that seeks to create a fairer and transparent ecosystem for content creators. Via this platform, users can access top-tier educational material and self-produced content with multiple features and services. The platform has an NFT market that allows users to trade with label-generated NFTs. In addition, the platform has a DAO governance model supported by a native governance and utility token named LBL, implemented to drive the growth of the Label ecosystem. LBL also operates as the main component in the voting and NFT shareholding reward mechanism. Label's unique NFT infrastructure is backed by CLESSON and OPENTRACK, one of the most relevant systematic music education companies based in South Korea. The platform hosts over 200 instructors and 25 top artists from around the globe. This top talent will be part of Label's entertainment education platform backbone and will bring fresh air to the MOOC model by integrating the artist's real-life experience in the music industry with the advantages of operating on a decentralized DAO governance model. 6 times Grammy Award winner Robert Sput Searight, 2 times Grammy Award nominee DeVille, 3 times Grammy Award winner Mark Lettieri, the producer for one of the biggest music groups BTS Docksim, and many others are some of the names that will participate in the courses operated by the CLESSON and further to be brought to the Label Foundation. In some cases, the instructors and artists will offer their IP rights on the Label platform incubating system. This will enable early investors to receive rewards in the form of NFT shares which can be traded on Label's marketplace, or they can hold them for further rewards. The entire system has been designed to protect content creators and their IP rights by minting them as NFTs. In this way, the Label community can choose which courses will receive support by using the DAO governance model and the LBL-based voting system. The courses that successfully attract LBL holders' attention and receive enough votes via staking will be registered on the platform using the ERC-1155 Ethereum NFT standard. This will allow the platform to maintain full transparency by showing the share ratio ownership of voters and investors according to their NFT shares contributed. At any point, investors can withdraw their NFT shares or they can retain them to claim the partial profits generated by the courses. Co-founder at HG Ventures, a key Label Foundation partner, Simon Jeung said the following on the project's commitment and potential to spearhead a new wave of adoption for cryptocurrencies and blockchain technology. As the lead investors in the Label Foundation, we are first and foremost fascinated by the dedication of the core team to the unified goal to revolutionize the entertainment education market by bringing the MOOC industry and blockchain technology together. We believe that NFTs will definitely need the next level of adoption, and the musicians, Artists and other content creators that were previously restrained from their legitimate profits will now be able to protect their rightful IP rights in the most innovative NFT infrastructure platform. Blockchain technology company Stratis has concluded its latest major update, with Strax tokens replacing their Strat predecessors. The swap follows a vote that saw over 97.5% of token holders greenlight the proposal, setting the stage for a revised tokenomic structure, new incentive mechanisms and improved block times. In total, over 93 million Strat tokens have been converted one-to-one to Strax, representing 93% of the circulating supply. The remainder were burned, effectively removing over 6.6 million tokens from existence. With the deployment of a brand new blockchain and native token, not to mention the imminent launch of an NFT marketplace, games and a Unity Engine SDK, Stratis is, like fellow sleeping giants Cardano, Tezos, and Polkadot, starting to wake up and make good on its promises. Stratis users who failed to exchange Strat for Strax can hardly complain. The platform announced the changeover last October, with token holders given a whole year to install a Strax wallet and exchange their old outgoing assets. The high number of tokens swapped underscored the simplicity of the process, which saw users trade Strat independently via a trustless on-chain mechanism, transfer their tokens to an exchange that supported the swap, Binance, Bittrex, Bithumb, etc., or manually swap them into Strax using a tool provided by the platform. The token swap was part of a raft of changes made to the platform, with block times reduced, block rewards increased, SegWit activated, and the introduction of both cold staking and dynamic membership. The latter enables any user to join the Cirrus sidechain as an acting master node, providing, that is, they meet the collateral requirement of 100,000 Strax. The management and monitoring of master nodes have also been simplified thanks to a newly released operator dashboard designed to help Microsoft developers develop blockchain solutions in a language they understand and love. Stratis launched in 2016 as an enterprise-focused blockchain-as-a-service company. In the years since, the platform has poured an immense amount of resources into enhancing its features and tooling, while onboarding companies from around the world. 2021, though, has been something of a breakout year. Not only is Ethereum interoperability imminent thanks to its Interflux solution, but Stratis recently launched a Unity development kit, enabling the integration of NFTs and decentralized identities into the gaming ecosystem. A number of gaming projects, Dawn of Ships, Trivia Legend, are now busy building on Stratis proof-of-stake blockchain, both due to its low-fee environment and 3D SDK. DeFi is another area of exploration for Stratis, as highlighted by the emergence of decentralized exchange protocols OpDex. Financed by Stratis Decentralized Accelerator Program, OpDex enables trustless token swaps, liquidity provision, mining, and staking in a non-custodial and gas-efficient manner. Recently released on the Cirrus testnet, the DEX protocols aim to bring much-needed diversity to the booming DeFi sector, which has largely centered on Ethereum. Founder Tyler Pena believes the fact that OpDex coded in #C means the ecosystem could drastically increase the adoption rates by developers while also decreasing the frustration of learning new languages, frameworks and tooling. Although DeFi, NFTs and blockchain-based gaming are now very much part of the Stratis universe, the platform remains, at heart, enterprise-focused. As such, it remains committed to pioneering use cases, onboarding businesses and organizations, and working with governments. Last month Stratis joined the UK's all-party parliamentary group on blockchain, APG Blockchain, which aims to provide evidence, guidance and recommendations to policymakers on blockchain-related issues. By acquiring a seat at the table, Stratis, described by APG Blockchain Secretariat Birgitta Anderson as one of the UK's most established and innovative blockchain platforms, will be in a position to influence and inform the UK government's decision-making when it comes to blockchain initiatives. The spoils, of course, are considerable. Business investment in blockchain technology is expected to reach almost $16 billion by 2023, up 40% from 2019. And with the wider crypto market currently in rude health, Stratis seems well positioned to capitalize on the feel-good factor. Peter Schiff is an economist, gold advocate, and one of Bitcoin's biggest critics. He has never liked the digital currency. He believes that real value is derived from an asset's ability to create commercial demand in markets, and always refers to gold as a perfect example of this. In contrast, he says that Bitcoin is nothing but an asymmetric store of value with no other use except attracting an endless supply of buyers for the limited supply of assets. In short, it is a Ponzi scheme. However, he has been proven wrong over and over again. In his most recent critique of Bitcoin, Schiff said it is not a real asset. This was in response to a tweet by Twitter CEO Jack Dorsey about the possible arrival of hyperinflation in the U.S. soon. On Saturday, October 23, Jack Dorsey shared his opinion on the current economic situation in the U.S. on Twitter. He tweeted about the imminent hyperinflation as a result of the constant money printing in the U.S., and how the rest of the world would suffer from it. Related reading: Is hyperinflation inevitable? Jack Dorsey says it'll change everything. In response, Schiff tweeted that people should not look to Bitcoin to save them because it is not a real asset. Instead, they should own real assets like gold. Just don't expect to find any refuge from it in #Bitcoin. To protect yourself from #hyperinflation, you'll need to own real assets. #gold qualifies, but Bitcoin does not. Peter Schiff, at Peter Schiff, October 24, 2021. Another Twitter user commented that Bitcoin is, in fact, real, and that it has just surpassed the Swiss franc in market cap. At this point, Schiff replied, calling the cryptocurrency a make-believe asset and that it is the adult version of an imaginary friend. #Bitcoin is a make-believe asset. Sometimes kids have imaginary friends. It's the same concept, except with adults. Peter Schiff, at Peter Schiff, October 24, 2021. According to this Wikipedia profile, Peter Schiff is an American stockbroker, financial commentator, and radio personality. He is also CEO and Chief Global Strategist of Euro-Pacific Capital Incorporated, a broker-dealer based in Westport, Connecticut. Additionally, he is involved in various roles in other financial services companies, including Euro-Pacific Asset Management, an independent investment advisor, Schiff Gold, formerly Euro-Pacific Precious Metals, a precious metals dealer, and Euro-Pacific Bank, a full reserve bank. In addition to all these, Schiff is known for something else: his grudge with Bitcoin. He has always claimed its value will one day drop to nothing. Earlier this year, Mark Cuban told goldbug Peter Schiff to move on because gold is dead. In response, Schiff said, "Mark, a lot of your athletes wear gold jewelry. Ask them why." Gold has many uses outside of jewelry that contributes to its value as a metal. It's not hyped at all. Gold is money. Bitcoin is 100% hype. It's nothing. Related reading: Mark Cuban slams Peter Schiff, gold is dead. Bitcoin and Ethereum are today. Cuban himself used to be a Bitcoin skeptic, preferring bananas to Bitcoin because he claimed he could at least eat a banana. In an interview on Good Evening San Diego a few days ago, Schiff referred to Bitcoin as a fool's gold and a digital pyramid scheme. He also said that the SEC should not be encouraging people to participate. When asked about the SEC's recent approval of Bitcoin ETFs, he responded that we should get rid of the SEC. He continued by saying, "I have no problem with the ETF itself, but if the SEC is pretending that it is some kind of watchdog and trying to make sure that investors don't get hurt, then it makes no sense that they would approve this ETF because ultimately, the ETF is going to collapse to zero and the people who are left holding the bag are going to get wiped out." Schiff is also not impressed with futures ETFs. He says, "Instead of owning nothing, you own a futures contract to gamble on nothing." An Ethereum ETF is expected to arrive as early as this year. The price of Ethereum could reach $20,000 as anticipation for the ETF's approval rises. Ethereum has hit a new 5-month high as a result of Bitcoin's month-long bull run. The newly released Bitcoin ETF caused a seismic reaction in the media and the industry's price action alike, as it opened the door for more institutional capital to enter the market. Market volatility directly correlates to the amount of flowing capital, and every crypto ETF strengthens trust in the market from an institutional perspective. An Ethereum ETF could therefore generate more exposure to crypto assets for investors. An Ethereum ETF might have quicker approval. The market is full of optimism after the first Bitcoin futures ETF gained the SEC's approval, and successfully launched in October 2021. The preconditions for crypto ETFs have already been met, making new products, including Ethereum ETFs, easier to launch in the market. Grayscale CEO, Michael Sonnenschein, told CNBC that the ProShares Bitcoin Futures ETF creates a precedent for the quicker delivery of new products for the market, including an Ethereum ETF. He argues that the SEC has become more relaxed towards crypto ETFs, given that they are actively monitoring one of them. Multiple firms, including VanEck and ProShares, have filed for Ethereum ETFs with the SEC, but they corrected their submissions when the SEC was considering their Bitcoin ETF. Regardless, Sonnenschein believes it is simply a matter of time until Ethereum ETFs are approved and transacted. Trey Griggs told Insider that the Bitcoin ETF already did all the heavy lifting, and with Ethereum bolstering its place as an asset class calls for more demand from investors. He also noted that an Ethereum ETF is technically an identical product with a slightly different underlayer, which could expedite the approval process. Additional influential figures have voiced similar opinions. Stefan Kulikin, Ether Capital's CFO, highlighted that it has become a certainty that an Ether ETF of the same kind can't be that far off, given that a Bitcoin ETF has already received approval. Moreover, the Wolf of All Streets tweeted that an Ethereum futures ETF is more plausible before there's a physical Bitcoin ETF. On the flip side, there is potential for Ethereum to rally to a new all-time high in anticipation of an Ethereum ETF, but it could deflate as traders could be selling the news in actuality. Bitcoin gained momentum pre-ETF, but failed to maintain its all-time high value. Grayscale is still waiting for the SEC's approval to convert its BTC Trust into a Bitcoin spot ETF. Crypto is a buzz. ProShares Bitcoin Futures ETF generated market uproar, however, to combat competition, after speculation arose that a second futures ETF might be on the horizon. Grayscale, which handles multiple crypto trust funds including Bitcoin and Ethereum, is taking another SEC filing route. Michael Sonnenschein noted that the future and spot prices are interrelated, arguing that the SEC will now be required to approve divergent crypto ETFs as they stand in the same financial pool. What's more, if an Ethereum ETF is approved and launched by 2021, other altcoin ETFs could also be considered, including blue-chip tokens such as Cardano, Polkadot, and Solana, which ultimately have the same exact underlying usability. In contrast to these theories, CEO of Arca Rain Steinberg, argues that while futures ETFs are good for short-term trading, they have massive tracking error issues over long periods, which contradicts most Bitcoin trader values. Thus, while futures ETFs give the market some exposure, trading stability and market resilience can be attained in physical Bitcoin ETFs, rather than options trading. Why you should care. Futures ETFs are not the same as physically backed ETFs because the new products allow people to speculate on the future price of Bitcoin, instead of getting exposure to the price of Bitcoin. Any crypto ETF should serve to increase industry trust and attract additional institutional capital, which helps to decrease market volatility in the long run. Email newsletter. Join to get the flip side of crypto. Upgrade your inbox and get our daily coin editors picks 1x a week delivered straight to your inbox. Contact Form 7. You can always unsubscribe with just one click. Continue reading on Daily Coin. Hit the like button and subscribe to the channel.